Hey everyone, welcome back to our monthly financial update. My name is Shiraz Ahmed, and today we're going to be diving into some key events that shape the financial landscape for the month of November of 2023. It's been a month full of twists and turns impacting various sectors, from interest rates to real estate, and of course, let's not forget the stock market. So let's jump right in and explore these highlights. Okay, so in November of 2023, the US Federal Reserve maintained the overnight Fed funds rate at 5.25% to 5.5%, emphasizing a cautious approach and readiness to consider further rate increases based on economic data. Now, this decision suggests that there's a potential pause in the tightening cycle. Despite a modest cool down in the personal consumption expenditures price index, inflation remains a concern. Now, the US economy demonstrated resilience with a 4.9% annualized growth rate in Q3, robust consumer spending, and a strong labor market, adding 336,000 jobs in September, maintaining a low 3.8% unemployment rate. Now, Powell highlighted the impact of rising long-dated bond yields, recognizing their potential influence on future rate decisions. Now, the Fed's overall outlook reflects a balanced approach, acknowledging economic strength while staying vigilant on inflation, leaving room for possible policy adjustments based on sustainable inflation pressures. Alright, so for November 2023, the US stock market closed on a strong note, with the Dow, S&P 500, and NASDAQ recording gains of 9%, and 10% respectively. Now, this positive momentum was driven by optimism surrounding the Federal Reserve's potential shift to a more growth-friendly monetary policy, supported by the personal consumption expenditures inflation gauge. Notably, 87% of the S&P listed stocks gained in November, indicating a widespread market participation. So this wasn't a localized event. Now, we only have real estate data for October of 2023. Pending home sales in October dropped 1.5% from September, hitting the lowest level since 2001. Worse than during the financial crisis, mind you, down 8.5% from October of 2022. This decline is attributed to a sharp rising in mortgage rates in October, briefly exceeding 8%. So despite rates pulling back to around 7.3%, housing demand still is affected by this tight supply, with Lawrence Yun, chief economist with the National Association of Realtors, highlighting limited housing inventory as a significant obstacle for pending sales, decreased in all regions, frankly, with the West experiencing the most substantial decline. Now, for the Canadian real estate market, about 30% of downtown Toronto's office buildings are considered obsolete due to tenants downsizing in response to remote work. In Calgary, the conversion of Kensington Gate into luxury condos is displacing existing tenants. Now, the Canadian Real Estate Association reported a 5.6% drop in home sales in September to October 2023. Now, the market is described as entering into early hibernation, influenced by the Bank of Canada's rate hikes. The rebound in spring activity could repeat in this coming year with increased market inventory. Predictions of potential rate cuts for mid-2024 are noted, and October marked a decline in new listings, reflecting the changing market dynamics. Okay, gold has surged to a record high, surpassing $2,060 per ounce, driven by factors such as lower bond yields, a weakened US dollar, expectations of no further interest rate hikes by the Federal Reserve, and geopolitical uncertainties. Now, the metal has experienced a 13% increase in 2023, with a substantial portion of the gains occurring in the last 2 months. Now, in contrast, gold miner stocks have not kept up pace with the rise of the metal's price. Although there are signs of recovery, the VanEck Gold Miners ETF has seen a nearly 9% increase year to date, suggesting the potential for a catch-up rally in gold mining stocks. Now, the divergence between gold miners and gold prices of the stocks really indicates a periodic upswing, but caution is really advised here, emphasizing that this is really temporary commitment to the gold miner trade if you're looking at it at all. And of course, please consider speaking with a professional regarding your risk tolerance before making any investment decisions. As we wrap up this month's financial recap, it's clear that the economic landscape remains dynamic and influenced by a multitude of factors. From the Federal Reserve's cautious approach to the surge in gold prices, we've witnessed a complex interplay of events. Remember, the world of finance, staying informed is key. If you found this update valuable, please don't forget to like this video, subscribe for more insights, and as always, feel free to reach out if you have any specific questions about your own situation. Until next time, please stay safe and take care of you all, invest wisely, and I'll talk to you soon. Bye for now.